capital market we can divide into two, primary market and secondary market. Then primary market is a place where companies brings a new issue of shares being described by the general public for raising funds to fulfill their long-term capital requirements like expanding the existing business or purchasing new entity. Then primary market means place where a company issues new securities for long-term purpose. Okay. Then through that one companies can expand the business and purchase new entity. It plays a catalytic role in mobilization of saving in the economy. It helps to mobilize savings, and multiple types of issue made by the establishment are offer for sale, public issue, issue of Indian depository receipt, bonus issue, right issue. These are the issues by primary sector, issues by capital market or primary market. Okay. Then now we can study about the difference between primary and capital market. Here first we can see the definition. A primary market is a marketplace where corporation imbibe a fresh issues of shares for being contributed by the public for soliciting capital to meet their long-term funds. That one we studied. Primary market means it is issue of new securities for long-term funds. Okay. Then that one for expanding business or like that. Okay. Then in secondary market, the secondary market is a prototype of the capital market where the debentures, current shares, options, bonds, treasury bills, commercial papers, etc. are patronized amongst the investors. Okay. Means second hand sale, that one is the secondary market. Means like debentures, shares, options, bonds, treasury bills, these are selling among the investors. That one is the secondary market. Then in primary market, first difference is it is new issue market, directly company selling. Okay. That one is new issue market. This one is after market. That is the different. Okay, secondary market means it is after market. In new issue market, direct we can purchase. In secondary market, it is indirect purchase. Okay. Then primary market, new issue market, and secondary market, after market. Okay. In primary market, direct purchase, and secondary market, indirect purchase. Then parties to buying and selling. Buying and selling take place between the company and investors. Buying and selling take place in the secondary market between the investors. Here you can see in primary market, buying and selling take place between company and investors. Means in that one company have a role. Okay, here you can see it take place between the investors. Okay. It provides financing the existing companies for facilitating growth and expansion. Means through that sale of securities, they can expand their business or company. Okay. In secondary market, it does not provide any kind of financing. In that one, they did not provide any kind. These are underwriters, and in secondary market, brokers are intermediaries. Okay, next one, it's remained fixed, and in secondary market, price levels vary with variation in demand and supply. We know depends on demand, price will increase and decrease. Okay, in this case, in primary market, it will remain fixed. That is the specialty of primary market. In secondary market, price will change. Okay. Then we studied what is the features of primary market. Primary market is a market for creation for long-term capital. Fresh issue of securities take place in primary market. These are the main points in primary market. It's for fresh issue and it's for long term. Features of secondary market. Secondary market facilitate the liquidity and marketability of existing securities. Okay, for existing securities means second already issued securities one more time selling, that one is secondary market. Secondary market ensures a true fair dealing for protection of the investors' interest. Now we can go to the secondary market products. First one is equity shares. What is equity share? An equity share, commonly referred as ordinary share, represent the form of fractional ownership in which a shareholder undertakes a maximum risk associated to business venture. The holder of such shares are member of the company. Equity shares means the holder of such shares are the member of company, and a company issue such shares with differential right as voting, payment of dividend, etc. Then equity share referred to ordinary share undertakes the maximum risk associated to the business venture. That one is the first one in secondary shares. Second one, right issues. Right issue means the issue of new security to existing shareholder at a ratio to those already held. Okay, means for existing share, for new securities to existing shareholders at ratio to those already held. We know in secondary market means already one time that securities are issued. Okay, third one, bonus shares. Shares issued by the companies to the shareholder free of cost by capitalization accumulated reserves from the profit earned by the earlier years. We know what is the meaning of bonus. Bonus means some capital accumulation or reserve was there, means from profit they can give to shareholders. Okay, that one is bonus shares. Next one, preferred stock. Owner of this kind of shares are entitled to a fixed dividend or dividend calculated at a fixed rate to be paid regularly before dividend can be paid respect to equity share. Means shares or shares entitled to a fixed dividend calculated at fixed rate to be paid regularly before dividend can be paid in respect of security share. Okay, then they also enjoy priority over the equity shareholders, and in the event liquidation their claims rank below the claims, and company creditors, bank holders, they can get the dividend. Okay, next one, cumulative preference shares. A type of preference shares on which dividend accumulate if remains unpaid. If dividends are unpaid, it will accumulate and it will pay later. That one is called as cumulative preference shares. Next one is cumulative convertible preference shares. In that one, a type of preference shares where the dividend payable on the same accumulate if not paid. In this one, dividend payable on same accumulate if not paid. Okay, means if not paid after a specified date, these shares will be converted into equity. If it is unpaid, it will become equity. Dividend we are not giving to shareholders, it will accumulate later, and what will happen, it will come as equity, it will convert as equity. Okay, next one, participating preference share. The right of certain preference shareholders to participate in profits after a specified fixed dividend contracted for is paid. In the participating preference share, the right of certain preference of shareholders to participate in profit after a specified dividend contracted for is paid. Okay. Next one is bond. Negotiable evidencing indebtedness. It's normally unsecured. A debt security generally issued by a company or government agency. A bond investor lends money to the issuer and exchange, and issuer promises to repay the loan. This bond, different types are there: zero coupon bond, convertible bond, debentures, commercial papers, coupons, treasury bills, like that. Different type of bonds are there. This zero coupon bond means bond is issued at a discount and repaid at a face value. That one is zero coupon bond. Next one is convertible bond, a bond giving the investor the option to convert bond into equity. That one is convertible bond. Next one is debentures, bond issued by a company bearing a fixed rate of interest is called as debentures. And next one is commercial paper, a short-term promise to repay a fixed amount that is placed on the market directly through specialized intermediary. A short-term promise, that one is commercial bonds or commercial paper. Next one, coupon, means tokens for payment of interest attached to the securities. Okay, then treasury bills, short term up to 1 year bearer discount security issued by the government. Okay, treasury bills means it's issued by the government. These are the types of bonds. Okay, then secondary market products are equity shares, right issue, bonus shares, preferred stock, cumulative preference shares, cumulative convertible preference shares, participating preference share bond. These are the secondary market product. Now we can study about the money and capital market. What is the difference between money market and capital market? Money market means it is a segment of the financial market where the lending and borrowing short-term securities are done. Okay, in money market, lending and borrowing of short-term securities are done. That one we are calling as money market. Now we can study about money market. Money market is an unorganized arena of banks, financial institutions, bill brokers, money dealers, etc., wherein trading of short-term financial instrument is being concluded is known as money market. Then money market means it is unorganized market. These markets are also known as the name wholesale market. Trade credit, commercial papers, certificate of deposit, treasury bills are some examples of short-term debt instruments. They are highly liquid in nature, and that is why their redemption period is limited to 1 year. They provide a low return investment, but they are quite safe trading instruments. Then money market means it is unorganized market of banks, financial institutions, bill brokers or money dealers. That one we are calling as money market. Now we can study difference between money market and capital market. Money market is a nature of market. It's a informal market. Money market, what is the nature of market? It's informal. And in the case of capital market, it is a formal market. Okay. In the case of financial instruments, treasury bills, commercial papers, certificates of deposit, trade credits are the main instruments in money market. But in the case of capital market, shares, debentures, bonds, retained earning, assets, securitization, euro issues, these are the capital market. Institutions, central bank, commercial banks, non-financial institutions, bill brokers, acceptance houses are the main institutions. And next one, commercial banks, stock exchange, non-banking institution, insurance companies, these are the main institution in capital market. Then a risk factor. If you are taking the risk factor, low risk factor in money market and high risk factor in capital market, comparatively high. Okay, then about liquidity, money market liquidity is high and capital market liquidity is low. The purpose to fulfill short-term credit needs of the business. In the case of capital market, to fulfill the long-term credit needs of the business. Okay, then time horizon, within a year. Money market means within a year, capital market means more than a year. In the case of merit, in money market increases liquidity, funds in the economy, and in the case of capital market, mobilization of savings in the economy. Okay, then return on investment in money market is less, and in capital market it's comparatively high. Okay, then money market means short term, capital market means long term, and it is informal, capital market is formal. Then money market including treasury bills, commercial papers, certificates. Then capital market shares, debentures, bonds and assets, etc. Okay, institutions, central bank, commercial banks, bill brokers, etc. Then in the case of capital market, commercial banks, stock exchange, non-banking institution, insurance companies, etc. Okay, then in money market, risk is low, capital market comparatively high, liquidity is high in money market, capital market liquidity is low. Fulfill short-term credit needs to the needs of the business. Then in the case of capital market, to fulfill long-term credit of the business. Then time horizon 1 year, within 1 year. Capital market we know it is long-term, that reason more than a year. Okay, merit increases liquidity of funds in the economy, and in the case of capital market, mobilization of savings in the economy. Return on investment, it is less in money market, and in capital market it is comparatively high.